All right, you guys, rule number one, as always, smash that thumbs up button, click the subscribe button, and turn on that bell notification. It helps out tremendously with the YouTube algorithm. As a lot of you that are subscribers as well know, you don't always get that video pushed to you right away if you are not already subscribed and hit that bell notification. Without further ado, let's talk about rule number one. Rule number one, or thing that I wish I would have known when I first got started investing in the stock market, is to be a meticulous planner. Know your risk, know when you're getting in, know when you're getting out, know these things. Know the reason that you are taking a particular trade. Obviously, all of these things are taught in my course in the link below, but really, you guys, honestly and truly, I don't think enough people are as meticulous of a planner as they should be. A lot of times it's very exciting. You get your first stock, you think it's going to go to the moon, and then unfortunately, you realize it's not. I think if more people focused on their potential loss before they focused on their potential gains, the stock market would be a lot different place. One of the things I wish is that someone told me that it was important, just as important, if not more important, to know where you are going to stop out and cut your losses, as it is to know how far that stock can run in terms of you actually taking your gains and making a profit on a particular stock. Rule number two that I wish someone told me was cut your losses fast. For me, I currently have a 3-to-1 ratio. I love to have a 3 times the amount of profit that I can make on a particular trade versus the downside to any particular trade. So when I'm going into a swing trade, I love to have that buffer and cushion. So that means I could cut my losses 3 times to break even with one winning trade. If you are in a swing trade and you are not looking to cut like you do during a day trade, always end up following your strategy. If there is a gap down and there is an area to add at that particular point, and if it continues to gap down, you need to get out. You still need to cut your losses, even if it is a swing trade. That's something that I don't think a lot of new traders really understand. Third thing I wish somebody told me was that base hits count. A lot of times you get so caught up in a stock that could run 30, 40, 50, 60% that you forget about those base hits, those 4%ers, those 8%ers, sometimes those 10%ers that you only took 6% on and they still ran to 10 or 12. Base hits count, and it is totally fine that your first few trades, as you continue to learn this crazy market, if they're base hits, I would almost more recommend taking those less volatile trades because it's not going to play with your emotions nearly as much. And it's okay if it's a small dollar value win, as long as you are focused on the percentage. That is one of the most critical things that I wish more people had told me when I started trading. Fourth thing I wish somebody told me was to not jump in too early on a swing trade. The basic trade setup for any swing trade is the gap down or the drop. You have your consolidation period where it starts to kind of basically settle on that level of support. You tend to get a slight pop up. You get the pullback to support if you're lucky. Sometimes they just continue to run, but usually it's nice to see that pullback to support and confirm that that is a level of support. And then finally, you do end up getting the uptrend pattern that you're looking for. Now, obviously, if the volume's not there, it's going to consolidate and stay there for quite some time. And sometimes there just isn't a news catalyst to get that going back up in the right direction. And so having good positive news with any sort of swing trade does do you wonders. One of the things we saw in Roku recently, as it slid from $176 down to $100 a share, it took a while. It had negative news. It kept selling, kept selling, kept selling. Took about a week and a half or so, and then some positive news came in, and we're now seeing Roku all the way at highs over $130 a share. That is a perfect example of needing to be patient in a particular stock. And also don't forget to smash that thumbs up button. And with a continuation from rule number 4, rule number 5 for me is I wish I knew that volume and news played as critical roles as finding the right chart setup. I didn't understand that you needed volume nearly as much as you do in order to make a profit. And the reason why is simply put, if there's no one there to sell you those shares after a large sell-off, there's not going to be shares there for you to really buy. If there's no one that's going to be buying it as it's run up, then you're also not going to have anyone to sell it to, and that share price is going to stay consolidating at whatever price point it was at. So I wish someone had told me how important news is and how important it is to have other eyes on that particular stock if you want to be making money on a consistent basis and not just getting in for a swing trade and holding it for weeks and weeks and weeks and weeks. That also reminds me that it's important to wait for that consolidation period and wait for that uptrend pattern, and not just get in because you see the company selling off hardcore and you think it's a good opportunity to buy in. that doesn't mean that it's not going to sell off even more. And here's a little bonus rule for you. Rule number 6, be willing to go long and short in a position. If you are going to be a short seller or kind of get into the trading community, this doesn't really apply as much to long-term or swing trading, but there also are some similarities between all of these styles of trading, and that is being able to understand what the other side of the coin is thinking. Oftentimes we see a company sell off and we only look at it as a good buying opportunity because we see the potential for it to rebound and shoot back up to the moon. The reality is you also need to see the eyes of those sellers. Why are all those people dumping their shares right now? Are they scared? Is there selling pressure? Are they feeling the pain? Are they feeling the squeeze? Pain and pressure points are the reason for the market moving in either direction. So if you can understand the pain and the pressure points that the other side is feeling, it will help you get a good idea and a good understanding of what you need to do as a trader and as an investor. Leave a comment below if any of these ideas resonate with you. Do you remember kind of what it was like when you first started trading? You know, what are some things that you wish you would have known as a trader? And for some of you that are learning, what are some things that you want to know? Leave those comments down below and I'd be more than happy to answer those and help you out. I can't wait to catch you guys in the next video. And like I said, if you haven't subscribed, hit the thumbs up button already, please do so. Check out the links below and I will catch you guys in the next video. Bye, you guys.